Despite the South African market being known to have a highly sophisticated financial sector on par with global standards, with around 80% of South African adults having a bank account, the Reserve Bank says more work needs to be done to achieve greater financial inclusion for all in the country. BankservAfrica speaks to some of the issues that warrant greater digitisation.
What we do see, unfortunately, is many of those individuals, when depositing cash into their account from a salary or a grant, withdraw that money almost immediately. And so there's a significant amount of the economy that is run purely on cash. And whilst cash is a really important mechanism for operating, one of the downsides is obviously financial institutions don't have insight into everyday transactions. And so it becomes very difficult to lend, to offer insurance products. And so financial inclusion almost just stops at bank account. So with that in mind, the primary driver for people to stay in a banking environment or on a mobile wallet is actually the ability to transact, so payments.
Asked whether it's striving to achieve a cashless society, the Reserve Bank said that this was not the case, adding that it wants to broaden the digital payments ecospace so that transactions, big or small, can be made faster, affordable and more securely.
What we want to do is, and of course, the formal banking sector has not been able to solve this over the last 30 years. So we need to open up the payments ecosystem to more non-banks, to other players, whether it's a Checkers, a Pep Store, an MTN, Vodacom, a Yoko, or any of these other fintechs that are playing in this space, to give them the opportunity to innovate and create products that can serve the broader society rather than just a niche market, and therefore try and bring digital options for transactions to the 60% of South Africans that rely on cash for their daily economic activities.
The observation really here is that it doesn't matter how good your payment infrastructure is, you need to mobilize the economy to actually use it. And so whilst we're getting good traction on the sort of the technical systems, which are really first class, it requires a much more coordinated response to move the overall market onto these channels. And it's predominantly been driven by sort of commercial enterprise within the banks. But the SARB is wanting to expand that. It wants to bring new participants into the ecosystem, so non-banks, and it's wanting to help drive this because it requires, particularly for cash substitution, it requires it's a top-down response more than just a bottom-up one to move people onto payment channels.
The Reserve Bank says it makes sense to tie up with BankservAfrica because that entity already has much of the infrastructure needed to achieve the bank's goal of increased digitisation, and says there's nothing unusual in the central bank, which also happens to regulate the shareholders of BankservAfrica, in buying into it, citing many other countries that have done something similar, including India, China, Brazil, the UK and the EU, among others.
We are hoping that we will deliver products that South Africans will see value in using. And all of the people in South Africa, everyone that is active in this economy, should see value in using this product rather than using cash. That it should be at low to no cost. It should be simple to use. When I press the button, funds transfer immediately to you, irrevocably. That there's trust in the system. It is simple, it's affordable, it's secure, and it can replace cash in the transaction rather than and improve security and allow people to then transact freely, whether it's with a taxi driver, whether it's with a car guard, whether it's with a street side vendor, whether it's with a spaza shop. We should be able to transact digitally everywhere, rather than only at particular parts of the economy.
BankServ South Africa is equally owned by 4 of South Africa's commercial banks with a 23.125% stake each, including ABSA, First Rand, Nedbank and Standard Bank. and an outfit called the Dandy Shelf Group, which has a 7.5% stake. The bank says that at this stage, a memorandum of understanding has been signed between it and these parties with a view to realising the deal. It's unclear when it will be done and dusted, but should the deal be announced, it will still have to go through the rigours of approvals through various regulators, including the Competition Commission. Nampumelo Siziba, SABC News, Johannesburg.